Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello, hello, hello. This is Roshonda, agency owner of the Isom Insurance Group here in the Sunshine State of Florida, welcoming you back to another Quick Bite episode, your fast and informative insurance market update. Today is Friday, January 30th, 2026. It's Friday, it's Friday, it's Friday, which means it is Free Friday. And during Free Friday episodes, we take on a real question that came through an insured or a prospect from the week. And this week, question came from a prospect who was frustrated and confused. They said, we were approved for the mortgage. We love the house. So why did the insurance quote kill the deal? If you've been through this yourself or watch it happen to someone else, you are not alone. This scenario is becoming increasingly common in Florida. And today I want to explain why it happens and how to prevent it from happening again. And quick note, can you believe it's already January the 30th? Like January of the new year is almost over this year. Oh my God. It's going by fast already. So let's walk through a situation I see often. A buyer gets pre-approved and feels confident. They find a home they love. They negotiate the price and sign the contract. Inspections are ordered. The appraisal is scheduled. Everyone feels like things are moving in the right direction. Then the lender updates the numbers, and suddenly the energy changes because the insurance quote comes back much higher than expected. Not a couple $100s higher. Well, I'm talking thousands of dollars more than what anyone anticipated. 3,000, 4,000, sometimes even $6,000 more per year. That's when the deal doesn't necessarily fall apart immediately. Instead, it stalls. The buyer feels blindsided. The seller feels frustrated. The agent is trying to hold everything together and the clock keeps ticking. Here's the most important thing to understand in this moment. The house didn't change, the math did. One of the biggest reasons this keeps happening comes down to a single phrase: estimated insurance. That number you see on a loan estimate is often just a placeholder. It is usually based on outdated averages or generic assumptions that no longer reflect the Florida insurance market. For newer homes, the estimate might be close, but for older homes, homes with older roofs, or homes built before updated building codes, the estimate can be dramatically off. I routinely see loan estimates showing insurance at $2,000 or $25,000 a year when the real insurance quote comes back at $5,000 or $6,000. No one lied, no one made a mistake, but the estimate was never designed to reflect the underwriting reality. An estimate is not a quote. A quote is not binding until underwriting reviews the property. That gap between what is estimated and what is real is where the deal falls apart. So when buyers hear a higher insurance quote, the first reaction is usually what went wrong. In most cases, nothing went wrong. The quote is simply reflecting risk. The biggest factor I see killing deals is roof age. Even if a roof looks fine, it's not leaking and passed a home inspection, insurance underwriting focuses heavily on age, material, and remaining useful life. A roof can be functionally fine and still be considered high risk from an insurance standpoint. Another major factor is the lack of wind mitigation credits. Without a current wind mitigation report, buyers miss out on discounts that can reduce premiums by 20 to 40%. That alone can be a difference between a manageable payment and a deal ending number. Location also plays a role. Two homes that look identical can have very different insurance costs simply because they are in different zip codes. Wind exposure, prior loss history, and local claims trends all matter. Finally, underwriting often happens later in the process than buyers expect. So true. The real insurance number typically occurs after the contract is signed, inspections are completed, and emotions are high. That timing makes surprises much harder to absorb. This situation feels new to many people because it is more common now than it was a few years ago. Insurance pricing was tightened significantly. Carriers are more selective, more data driven, and less flexible than they used to be. They are no longer pricing based on best case assumptions. Replacement costs have also increased. Insurance is based on the cost to rebuild a home, not the market value. A house purchase for $350,000 may cost $500,000 to rebuild today. That surprises a lot of buyers. Remember, market changes, market fluctuates depending on demand, depending on supply. There's so many things that go into market value. But insurance does not look at market value because market value is just, it's the sky's the limit on market value. There's no limit on really what a market value would be. So there's no way an insurance company could price on market value. Insurance companies price homeowners insurance policies on replacement of the home, replacement of that structure. Lenders are paying closer attention as well. Insurance has moved from a background line item to a crucial part of affordability calculations. If insurance pushes the monthly payments too high, the deal no longer works, even if the buyer loves the home. Again, like I said in a prior video, it goes back to that debt to income ratio. And insurance and taxes get rolled into that debt to income ratio. And if insurance is too high to throw that debt to income ratio off or whatever the acceptable limit is for the lender, that's what causes the problem. The good news is that this situation is preventable. Buyers should get a real insurance quote before making an offer. And like I've said again in a prior video, I do have some customers when they were out shopping for another home or they're getting ready to sell their home and looking for a new home to purchase, they called me first before they even had an offer. They said, Roshonda, I'm looking at this property and that property. Can you give me just a generic kind of preliminary quote for these two properties? And I did it. So that kind of helps them go into the market armed. That quote should be based on actual addresses, roof age, year, bill, and square footage. Again, a lot of that information is readily available. When sellers are listing, they usually put they want to show, hey, we've done all these updates to the home, and they'll usually put all of that. Even without inspections, we can run quotes based on those assumptions. Again, just to give you a preliminary quote, which is better than an estimated rate from a mortgage company that does not know. Buyers should also ask about the roof early in the process. Knowing the age of the roof and whether there is documentation available can save weeks of stress later. Another thing I want to highlight besides roofs is water heaters. Water heaters are becoming a big pain point for insurance companies. A lot of companies now have strict restrictions where they're not taking water heaters that are 15 years or older. So please, if you're in the market purchasing a home, find out about the age of that water heater and include that in the deal. If you want, hey, I need you to replace the water heater. It's also important not to shop for at the very top of your budget. Insurance can easily add $300 to $500 per month to the total cost of ownership. Leaving room for that makes a huge difference. Most importantly, buyers, agents, lenders, and insurance professionals need to communicate early. Silence and assumptions are what kill deals. If you've if you're a real estate agent or a seller watching this, insurance is now a part of qualifying a buyer. Providing roof documentation, mitigation reports, and prior insurance history up front can prevent late stage surprises and help deals close faster and cleaner. To that point too, I want to say something else about this. Sellers, if you have filed a claim on that property, whether that claim was paid or unpaid, please disclose that to the buyers, because there are some carriers that don't just look at the buyer's claim history, they look at the property claim history. I have had some policyholders that were looking to write them with one carrier. that we couldn't write them with them once we run loss history reports, and you usually don't run those until almost the very end of the application, because there's a cost to run those reports. So insurance companies don't want us just running those reports on every quote. They want us doing that when they're actually getting ready to buy the policy. So what has happened is there's some carriers that don't just look at the individual, like the insured for loss history. They pull the property loss history. And if the property has had certain claims or certain things that have happened in that loss history, that new buyer, the person, the insured that's, looking to get a policy for that property now, will get declined. So sellers, please disclose that, even if you did not, if you didn't get paid out for it. I don't know what the real estate rules are per se, but I would just think it would be in good faith to kind of disclose that, because you want the deal to go clean and smoothly and fast and get it closed and move on, right? And to do that, if you give more information to the buyer, then the buyer can go to us, the insurance agent, and we know what carriers to look for with certain loss histories. And it just saves time, and it saves stress, and it makes it faster and smoother for you. Insurance is no longer an afterthought in Florida real estate. It's part of the decision-making process. So stop treating insurance as like, oh, we'll just get that the day before we're getting ready to close. No, you need to be on that early. If insurance quote killed a home deal, it usually wasn't because the buyer did something wrong or the house was a bad choice. It happened because the insurance reality showed up too late. A home deal doesn't die from one big surprise. It dies from one surprise that comes at the wrong time. If today's Free Friday Quick Bite episode helped you understand why insurance quotes are impacting Florida home deals and how to avoid that frustration, now is a great time to ask questions early and plan ahead. Please feel free to visit our website, isominsurancegroup.com. Again, it's below me in this video, for a free, no obligation quote or policy review. If you found this quick bite helpful, please like this video, share with your friends and relatives, and drop comments below with any questions or any topics you would like for me to address in any upcoming episodes. And as always, quick bite episodes drop Monday, Wednesday, and Friday at 2 p.m. Eastern. This video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional regarding your unique situation. This is Roshonda with the Isom Insurance Group. Thank you for watching. I will see you next time. Please stay safe out there. Have a great weekend. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.